Another stock market crash, like 2008, is coming. Here's what I'm doing about it. Hey everyone, it's Felix. Welcome back to the channel. Today, I want to talk about something serious and potentially life-changing. Are we on the verge of another stock market crash, like 2008 or even worse? And most importantly, what am I personally doing about it? How can you prepare? Buckle up, because in the next few minutes, I'll walk you through the warning signs flashing in today's markets, compare them to past crashes like 1929, 2000, and 2008, and share my exact playbook to protect my investments, and even profit when the bubble pops. Why people are nervous. Now let's start with what's going on right now. In 2025, the Nasdaq has been on a tear, surging to new all-time highs, much like during the late 1990s dot-com bubble. The S&P 500 has gained over 20% in less than a year, even though corporate earnings growth is slowing. AI stocks are skyrocketing, with companies like Nvidia, Palantir, and many smaller names trading at extreme valuations. Investor euphoria is at its highest level since 1999. But here's the catch. Underneath the surface, there are cracks forming, and they look awfully familiar to past bubbles. Lessons from history. Let's compare today to past market crashes, because history often rhymes. The Great Depression, 1929. Stock prices soared due to speculation, many investors borrowing on margin. Dow Jones quadrupled in a few years, then crashed 90%. Lesson: speculation plus leverage yield disaster. The dot-com bubble, 2000. Internet stocks rose to sky-high valuations with no profits. Nasdaq tripled, then collapsed 75%. Lesson: hype without fundamentals ends badly. The financial crisis, 2008. Housing prices skyrocketed due to cheap credit and risky mortgages. When housing prices fell, banks collapsed and the S&P 500 dropped 150%. Lesson: excessive debt anywhere in the economy is a ticking time bomb. Today's red flags. Here are the key risks now that remind me of past crashes. Overvaluation. AI and tech stocks at PE ratios above 60 to 100. Excessive speculation. Meme stocks, options trading at record highs. Rising interest rates and debt, rates at 20-year highs. Geopolitical shocks, tariffs, trade wars, and global tensions. AI bubble. Overpriced expectations without guaranteed profits. What I'm doing right now, how am I preparing? Diversify. Moving away from just tech into value stocks and dividends. Hedge added bonds, tips, and gold. Keep cash, holding 15 to 20% cash to buy during dips. Set stop losses to limit downside. Avoid over-leverage. No borrowing to invest. Stay informed. Watch key indicators. What you can do. Here's my advice. Don't panic, but don't ignore the signs. Rebalance. Diversify away from risky positions. Build an emergency fund. Educate yourself about past crashes. Think long-term. Stay patient and disciplined. Final words: no one can predict exactly when the next crash happens, but the warning signs are there. More fortunes are made by staying disciplined during downturns than chasing bubbles at the top. So that's what I'm doing. Staying diversified, hedging, and being patient. What would you do if the market fell 30% tomorrow? Are you holding cash, buying gold, riding it out, or something else? Drop your strategy below. I'll reply to as many as I can. Subscribe for more insights. Stay safe, stay smart, and see you next time.